amid growing concerns about economic growth.
Consumer spending was
As
soft.
expected, cut interest rates another quarter point.
We are following breaking news. All three major American stock markets have closed down.
Bitcoin rose 10%.
It even gave the stock market a temporary second win.
The market reaction, it was kind of nonplussed.
Tariffs going into effect tomorrow.
But the NASDAQ was also...
Investors will be watching closely for more clues about the direction.
It's time to tune out the noise and tune in to great information with A Steward's View. Expect valuable economic updates, investing techniques, and planning concepts that move you to be wise and decide well. You'll be equipped and encouraged in a stewardship mindset, managing God's resources 1 week at a time. You can listen to this podcast and previous episodes at astewardsview.com.
Welcome back. I'm Aaron Kolkman. That's Chaz Lowder. Here is Paul Larsen, and this is A Steward's View. So glad you joined us again. This week, we continue our series in Beyond Returns, and we're going to pivot to planning. That's financial planning. We've spent about 6 months together on economics and investments, and in the really context for decision making in our economic environment and the markets. And so we're going to get really into practical decisions this week, and we're going to start with building your estate, okay, or the picture of your estate. Before we begin, do please remember to visit this, and there are many episodes now over the past 6 months that you can check out on astewardsview.com or on your favorite podcast platform. That's Apple, Amazon, and Spotify currently. Those are the three that we're on. But before we dive in, let's take a look at what happened last week. Investors' growing confidence on interest rate cuts propelled the S&P 500 and NASDAQ composite indices nearly 1% higher to new record weekly closes despite mixed inflation data. The Russell 2000 jumped 3% and international stocks posted solid gains. An extension of the tariff truce between the U.S. and China also boosted sentiment. 7 of 11 S&P 500 sectors finished positive, led by healthcare, communications, and discretionary. Crude oil prices were little changed, even as OPEC raised its global oil demand forecast for 2026 and lowered its estimate for U.S. supply growth, suggesting a tighter market. Gold futures fell 2% as traders awaited further clarification on whether gold bars would be subject to U.S. tariffs. Ethereum continued to dominate cryptocurrency flows, surging 18% before settling for an 8% weekly gain. And I'm sure, Chaz, that that's still of interest to you, yes? That's an affirmative. Meanwhile, U.S. Treasury yields initially moved lower after Tuesday's CPI report, which revealed that consumer prices increased only moderately last month. That news also sent equity indices sharply higher as rate cut expectations increased. However, Thursday's Producer Price Index report showed a 0.9% jump month over month due to a large increase in services and food prices, a result in line with economists' view that tariffs continue to pose higher inflation risks. 2-year Treasury yields, a good proxy for where investors think the Fed funds rate is headed, fell to a 3-month low of 3.66% before ending the week modestly higher at 3.76%. Meanwhile, the odds of a September rate cut, which approached 100% after the CPI report, still stood near 85% at week's end, despite the upsurge in wholesale prices. In other economic news, U.S. consumer sentiment sank this month, and we'll talk a little bit more about what that is, by the way, Paul Larsen and Chaz Lowder, and all of you listening. I know consumer sentiment is kind of this qualitative, undefined thing.
Nebulous.
Yes,
Nebulous.
Not totally clear, like how many other economic indicators we've just touched on and not delved into, right? Okay. So, by the way, did you know that the Economic Machine episode that we did recently was one of the most highly listened to episodes that we've ever done in 6 months? Yeah.
Wow.
I was really surprised about that. And it had a lot to do, I think, with your questions. So thank you, Chaz. But anyway, back at the ranch, we'll talk about those estimates. In this case, the U.S. consumer sentiment sank well below estimates in that in relationship, inflation expectations were the main reason. Okay, as the 1-year outlook rose for inflation expectations. The long run view increased from 3.9%, up to 3.9%. There we go, from 3.4%. And retail sales, which are not adjusted for inflation, grew 0.5% last month. Overseas, China's industrial production and retail sales figures for July missed forecasts, raising pressure on the government to create additional stimulus measures to stoke demand. The Eurozone also had GDP grow slightly in Q2 as industrial output dipped, while Britain also reported slight growth. So we're seeing this trend play out of moderating growth that was, if you think, Chaz, about the very first episode we did back in March the 3rd, we started this program after years of planning. Okay, I realize that, Chaz, you're kind of a late entrant into that, okay, but a good one. And Paul, you too. But I mean, really, I've been in this with the Lord for years and this planning this whole thing. And Paul's been a big influence for quite a while. And when we started, the very first episode we did was kind of a makeshift episode. I think there were probably a month of those. And it was called Moderating Growth in 2025.
Yeah.
Still our number one most listened to episode. And I find that interesting, or it's one of the top. But the thing about that is that everything we have talked about since, in terms of the economic readout that Aaron Kolkman's not in control of, has really seen that theme play out, right? In fact, we've seen it on a global scale. So we hear about these slight growth metrics in GDP in foreign countries and in the U.S. We hear a little bit of the recession word yet, as we have before, but it's not really something that is as much of a buzz right now. And I'm really glad for that, to be honest, because it has this scare effect, right? That doesn't really help anybody sleep, even if the recession risk is just for a slight, a minor recession, right? So I'm really happy to see how this is playing out. It's just more consistency. And that is the name of the game for the long-term investor. We want to stay in this mindset of, well, if we have a moderate growth year or a high growth year or a low growth or no growth year, we're going to stay that course. We're going to allocate money. We're going to optimize money. And then we're going to really just go about the business of living our lives and knowing what our goals are, what our life goals are, and what our financial goals are. And they're two different things, aren't they? So this week, let's talk away from investing and into planning, right? We've had a lot of conversation in weeks past about optimization, about, frankly, really complex stuff that if I had to guess, it'd be some of our least listened to episodes as time goes on. There aren't many people that like to sit and listen to capital asset pricing model. Let's be honest.
Okay.
But here's the thing. There's a value in it, and that's why we talk about it. So when we get to funding goals, I'd like to spend weeks on just what it looks like to do goal setting for the lifetime of a person or a family, right? That is worthy of lots and lots of attention. I'm not prepared to do that today, just because of the breadth of that discussion. That's probably better for a white paper somewhere. But for today, what I'd like to do is say, okay, if you know the difference between life goals and financial goals, if you recognize that a life goal is something like, well, I see my life changing at some point based upon my understanding of where I'm going and what I'm called to, then this is something about what that change is or what it looks like. Okay, that's a life goal, right? A financial goal says, well, I want to be able to send my children to a 4-year college, each of them, and pay for 50% of their college. Okay, that's a very specific numeric thing, right? So the effort in my day-to-day has a lot to do with tying those things together, right? But we're going to assume, for the sake of this particular session, that those two sets of goals are known by the family or the individual that is being served. So for you, the listener, if you don't know your life goals, if you don't know your financial goals, that's okay. Look for good help around you, preferably with a certified financial planner or somebody that has the right credentials to do that work. There's a chapter in my book I'll post by this evening called Finding Your Fiduciary that can help you with that. The Life Cycle book is coming back out later, yet this summer, I think end of August. August 31st is our target date. I've got it in my inbox, Chaz. It's ready to go. Might actually be tomorrow. Come on, don't give me that. August 19th. That's tomorrow. I'm almost ready to bet you.
Okay.
There's an upload button that the publisher hits.
Okay, I'll take that bet and invest it in the market with ChatGPT.
Into Ethereum. Oh, perfect. I thought maybe Ethereum was going to be your thing. All right. So anyway, and that's long-term Ethereum,
that's
right? Not short-term.
That's
okay. Right. In the Life Cycle of Wealth book, that is a life planning book, right? Meant to give you a view of a lifetime of goal setting and then backing into numbers and doing that biblically, by the way, for the Christians that are listening. So there's a chapter in there called Finding Your Fiduciary, and it goes through the 5 different types of financial offices that I've broken out that you could go to and what it's like when you go there. Okay. So I'm not one to try to get into where you should and shouldn't go, but I do want you to be on the lookout for qualified help when you're making decisions. That, to me, with or without help, starts with the 4 corners of a puzzle box. So we'll take a break here in just a moment. But when we come back, let's talk about what is on the balance sheet and what's on the income statement. So what do you own and what do you owe? What's coming in and what's going out? Those are the 4 corners of a puzzle box that we all get to deal with and we can make decisions from. So specifically the balance sheet, that's what you own and what you owe. That is your estate, right? So it's the foundation of estate planning, and that particular aspect of our conversation today I want to get into right after this.
Rural Music Fest is back, and this year features Seth Schluter, August 22nd through the 24th at Redemption Hill in Isle, Minnesota. Sing along with Sanctus Real. It's the 4th annual Rural Music Fest with bounce houses for the kids, food trucks, raffles and prizes, and music from over 15 Christian artists like Grammy Award winner Dante Bowe. And closing this year's Rural Music Fest, Colton Dixon. It's the Rural Music Fest, August 22nd through the 24th. Learn about camping, volunteering, see the entire lineup, and RSVP for this free event at ruralmusic.org. Rural Music Fest is back. Sorry.
With Chaz Lowder, the most famous host ever. Look at him go.
So, Aaron, we should talk before we get back into it. The Rural Music Fest is this weekend.
Yeah.
It's Friday, Saturday, Sunday, August 22nd through the 24th. And it's going to feature Seth Schluter. It's going to feature Sanctus Real, Sonny Sandoval of POD fame from back in the day for you rockers. He's going to be giving a gospel presentation on Saturday night. And on Sunday, to wrap things up, the Teen Challenge Choir is going to kick off the day. And then Grammy Award winner Dante Bowe, formerly of Maverick City, will go on right before Colton Dixon, who will close down the whole thing. So it's going to be an incredible event. If you live in the Twin Cities or the greater Twin Cities area, or even if you just feel like a drive, it's a free event, 3 days Christian Music Festival happening Friday, Saturday, and Sunday. Details are at ruralmusic.org.
Awesome. And that's at Redemption Hill in Isle, Minnesota.
You got it.
Oh, so cool. I'm so glad you added all that. In fact, I'm just so humbled that Chaz has continued with this effort at Steward's View, because that's been a piece of his puzzle, his time puzzle, not his financial puzzle, although they relate, don't they, Chaz?
They do.
But we're just really looking forward to that event. This program has been in support of that event for a long time. And in fact, that's how Chaz and I met last year when we were, I was trying to figure out how to put all this together. So praise God. And it sounds like that event is, if I had to guess, it's going to grow again this year from last year. Yeah,
it'll be interesting to see. I feel like the attendance projections are a little flat right now, maybe even a little under. They were expecting, like last year was around, and it's hard to say, 15 to 18,000 people last year. I bet you this one is going to be closer to 15, 16, maybe a little bit less. But no matter what, there's going to be thousands of people there. People are going to come take steps closer to a relationship with Jesus. It's going to be powerful. So if you if you want more information, ruralmusic.org.
And I just love how 60 people came to Christ last year at that event, and began a discipleship process. It's not just, Jesus is my Savior. No. They're starting to walk with the risen Christ.
And dozens baptized too. I mean, it was wild, really wild.
Awesome. Special. In a national event now, a count of 18,000 people from all over the country.
Yep.
And I could say that because I was there.
Yeah. There.
All right. Cool. So back into the topics we have today. So in this second segment, I kind of set the table in the first segment for talking about the puzzle box that we all have to do when we get into financial planning. And we've looked at the environment that we're in. We looked at the markets that we're in, and we've said, okay, I've got these resources, right, that I'm going to apply to these life goals. And I know what those goals are. And now I've got to do something. Okay. So when we take that puzzle box and we say, well, there's a balance sheet and an income statement. There's four corners: what I own, what I owe, what's coming in, and what's going out. That sounds really simple, and it is. But I submit to you that every decision you make in hopefully life terms, but at least financial terms, flows from those four corners, and once you've completed the puzzle, which is what, in my view, a qualified professional can help you with, now your decisions are going to flow from that completed, the puzzle box.
So
right?
the four corners are what I owe, what I own, what's in, and what's going out.
That's it.
Okay, just making sure I got it.
In, out.
I'm just making sure I got it, because that's going to be a promo right there. That's
okay,
good.
Great. Let's
clear.
Let's stick with that. So, in the case of the first two, what you own and what you owe, I mentioned estate planning earlier, and this has been near and dear to my heart, especially for the Christian community that we serve. Both in terms of the practice at Fiduciary Advisors and this program, but also in terms of the comprehensive nature of estate planning. Right. So if you were to read the life cycle book and go and figure out there's a difference between modular and comprehensive planning, right? It's different. It's a different thing to say, well, I want to know when I can retire from my day job and afford a life change and still, do some things for my kids and grandkids. Okay. That's a different thing than saying, well, I want to pay less in taxes. They're related, right? But they're not the same thing. So there are two forms of modular planning. Right. And I could go into what all the modular planning areas are. The point is that estate planning is the most comprehensive type of modular planning. And that is an experienced opinion. It is an opinion, but I guess I'll leave it. If you find a more comprehensive type of planning anywhere, you, the listener, please let me know. Visit us at astewardsview.com, schedule some time. We'll talk about it, or send us an email, comment on the podcast platforms. But I digress. Let's get into that form of planning. So, Paul, if I say to you, well, I've got this balance sheet, I've got what I own and what I owe, right? We know that that's, God's ownership.
Sure.
Right? We know that we're stewarding those assets, and, we're minimizing debt would be a way to think in terms of how we proceed with debt. And then, okay, now this is my estate. I know what my life goals are. We're not really into legacy planning yet, but we do want to do clear thinking about what's on our balance sheet. So we have equity, hopefully, or net worth, the difference between what we own and what we owe, that has to do what? To fund goals in addition to our cash flow, especially if that's net positive and it's increasing our balance sheet, right? It's growing the balance sheet. So what I'm asking you is, if we can optimize that and fund goals with it, what are the considerations in your mind?
Well, you're funding your ability to pass on a legacy. Legacy is a term that we've used a lot. But along with that, there's a legacy on the way. There's the kind of ways that you developed the money coming in. And there's a kind of mentality and thoughts that goes into how that money goes out, right? So it is there's a stewardism, there's a stewardship mentality.
There it is
in all four corners of that box. And keep in mind something. There's a lot of Christian financial people that really, debt is always demonized, right? But what if the money you owe to some older people that can't take the risk of equities and the ups and downs?
You better say that again. What if the money you owe, say that again.
What if the money you owe, the interest you're paying, is to people that need a fixed income? Okay? See, debt and equity are just two different components of the capital structure of the country, of the world, of each individual. So we want to be careful, I believe, in just automatically demonizing the debt side, the liability side, of our balance sheet, right? So that's just one consideration. And there's a lot more that goes with that. But my point is, the four corners of your puzzle box, as you call it, are not necessarily good or bad. Okay? Mm-hmm. They're components that add up to just how you are stewarding not only the money, but the time and the talent that you have and have been given also by God, right?
Because I'm a broadcaster, I'm a creative. I made a little box. I made the puzzle box. I put the Fadir tree in the middle because I'm thinking of branding. I'm over here scribbling and taking notes, and I don't know if this is right. You guys can unpack this. I wrote it down with O. I put an O, and then the letter O and a negative sign next to it. I put up on the right corner. I put a positive, an O with a positive. And below I put out, I put a negative, and on the other side I put in with a positive. Now I was thinking, I wonder if that's actually the correct, as you were talking, I was thinking, I wonder if that's actually the correct construction of that box. Because I'm thinking about, again, now I'm being a little too maybe inside baseball, I'm thinking about signal flow, in and out. But I don't think this box necessarily represents that. Maybe that's too philosophical. But if you think about that box in your brain and you go, top left corner is negative O, and top right corner is positive O. I don't know if the order matters or not, but as you think about analyzing and funding your goals and funding your future and funding your legacy and all that stuff, I was thinking about it very positive and negative, very, to use modern terms, very binary. But maybe you can unpack that a little bit more about why that's not necessarily bad. Because what Paul's saying about debt is, especially you think about Christianity and people of faith, we don't want to be slaves to the lender and all that sort of jazz.
Right. So the Bible is full of references to money and counsel about money. In fact, it's the number one most referenced topic in all of Scripture.
Money and possessions.
Money, sure.
Money and
over 3,300 times. Right. And isn't it interesting how little we hear about money in the church, by the way? That's not a put down. That's an encouragement.
Well, it's an encouragement to up that.
Yeah.
Right.
That's a hope.
Because here's my take on that. It's actually a little more of a challenge than that, because you won't find one seminary that has a course or a degree or a cognate in anything to do with finance or economics.
Truth. He's
right.
You
won't find it. People might say, well, why would I want to hear about that in seminary? Well, let me tell you, for most people, the church has got a good idea for something to do on Sunday morning. But the other 6.5 days of the week, people are making economic decisions all day, every day. How do you use their time? How do you use your talent? How do you use your money? They're making those decisions. And so if we don't have a way to speak positively into the thing that people are doing all the time, that's falling short, isn't it? If we don't have a proactive, that means positive view, okay? We hear a lot of people shame this, shame that, okay? And tear up your credit cards. But in my 30 years in this business, I've run into people. They went to some seminar and they called me up and says, I cut up all my credit cards. And I said, oh, really? Within a few months, one of the two of the couples has taken a second job because it wasn't the credit card that was the problem. It was their love of stuff.
Yeah, spending.
And so they're going to work. They're going to take more hours away.
Or how they spent their time.
Well, they're going to take more hours away from their family so they can still get the stuff.
Right.
So the problem is we think the stuff is going to make us happy. Okay. And so we want to be a check on that. We want to be a check on that. So to your point, Chaz, those four corners are just four components that we have to create a calculus around. They're not necessarily plus or minus.
Right. And from a wealth management standpoint, and a stewardship standpoint, both, right? One is a secular term, one is a more biblical term, okay? Or biblical reference. The point I try to bring is that this is a living, breathing thing, so to speak. It's an organism, right? And there's a daily change to that organism. The interaction of those four corners is, looks different. Or not the interaction, the
relationship,
the data set every day looks different. when you say, well, I made $1 today or I spent $1 today. Okay, well, tomorrow you have one more dollar in that puzzle or one less dollar in that puzzle, right? Where did that go? Did that reduce debt? Did it increase what you owe? Either way, if it did go to balance sheet improvement, let's say it's income and it doesn't go back out the door, you're improving the balance sheet. There's two different ways to do that, right? I can increase what I own or I can decrease what I owe. All right. So I just want maybe the fluidity is a better word than the living, breathing thing I mentioned. But what I want people to get is that it's an ever-changing, it's a dynamic picture, okay? And without that picture, this is where, in all seriousness, I spend more time. I mean, if somebody would have said to me before I finished the CFP designation, that takes years to get, by the way, amazing people with that designation that do really good work. But if somebody would have said to me, look, you're going to spend a lot of time in a good way working on goal setting and building balance sheets and income statements, not managing investments, not setting up insurances, right? Which is where our industry's been for a long time. But to do fiduciary work now, like this is going to be the thing. Okay. Like I would really appreciated the heads up. That's all. So what I'm trying to get to is that without knowing what this dynamic picture is, I mean, I spend so much time building that picture just to hand it to you, Chaz or Paul, and say, this is what it is, right? You and your spouse, maybe, hopefully. And now, okay, here's the life goals, right? Now we're going to start to connect dots, right? Things change, okay, and we go through it. But I can't tell you the number of times that, I'd say more than half where, we have 4 new families in my practice this summer, which is remarkable by itself. But one's a business owner, one is super successful entrepreneur. One is a really super consistent, impressive nurse. I got to think of the others off the top of my head. One is a marketplace minister, and I'm forgetting one more. But all different walks. All of them need to see this dynamic picture. And more than half of the new people that I see in a year don't have it coming in. And that's okay. That's totally fine. I'm just trying to speak to why this is a big deal, because it's, it's easy to, cut up the credit cards. Okay. Well, yeah, have an envelope system. Yep. That's good. Like that's all stewardship, right? But does it give you that picture that you need to see forward? Right? Clearly, right? Like you can say, well, this is my call. This is where I'm going. Well, okay. What's the picture that you're working with? I don't know. I cut out my credit cards. You know what I mean?
And to that point, people want a set it and forget it.
Ron Popeil. Okay. A little reference from the past.
Yeah.
Late night TV.
And but people actually want that in their faith too.
Yeah.
Listen, I went forward. I checked the box on the card. I go to church, 3 out of 4 weeks, right? Unless there's a game on, right?
Right.
But I'm checking the boxes, right?
Yeah.
I'm trying to measure up, but that only works if I've got all the boxes, right? Yet Paul tells us to work out our salvation with fear and trembling. That there is a dynamic, right? There is a life there, and there's a life, and in my experience over many decades, is that when you think you've conquered some kind of anxiety or sin, it's just peeling the onion back. So now God's revealing something else that you need to have victory over. So it's all dynamic. And so some kind of a automatic system that we plug in the numbers right now and you're good for the next 35 years. It's not realistic. And if you try to make something that simple, what's going to happen is you're going to be cleaning up a mess in 6 or 8 years and then doing it again 6 or 8 years later.
Yeah.
Right. So it is a dynamic. It's daily decisions. It's because the decisions are not just is the raw decision right or wrong, but what was the heart of the mentality? You talked about I spent an extra $1 this month. Well, it turns out I spent that on hiring a local kid to do my lawn instead of me doing the lawn.
Right.
So you're part of the economy. You're not a single cell battling to survive. You're part of a community. You're part of a family. And so all those things do come into play, and we don't mean to make it so complicated that no one can get their arms around it.
Right.
But it takes a different way of thinking. For the standpoint of financial planning, we gotta take a hard look at those four components, so we can put some kind of plan under the financial part of the plan. But there's so much more in legacy planning than just the financial side.
Thank you, Paul. And we're going to get into detailed conversations about legacy planning in September. I mentioned that. So we're kind of warming up to estate planning here. We didn't really get into that topic today. That's okay. This is great conversation. And by the way, Paul, the kingdom mindset that you're bringing, I'm glad you're sitting here on a Monday, which is unique, right, for our standard program, because we recently said in the stewardism series that we record on Wednesdays that, and this is learning growth for Aaron. Okay. Like, guess what? It's not all numbers. Okay. I know that on a heart level, but mentally, like day-to-day mindset, like the financial aspect of what we're doing is a piece of what we steward, right? It's not an either or. So we talk about the gospel of money, right? Being, running on empty, right? And we talk about the gospel of the kingdom, or the gospel of Jesus Christ. And what I'm alluding to is a recent episode in our stewardism series where we said, hey, this is a piece, we talk about the financial puzzle, but this is a piece of the kingdom mindset that we deal with, right? And so thank you for joining this particular episode and bringing that particular viewpoint, because this, frankly, is very heavy on the finance and economics. So it's been really nice to have this change for our normal weekly series. With that, let's get more into estate planning next time. We're going to continue working towards a legacy conversation in September, where we get into specific planned giving type activities and steps. I'm working right now to try to bring along a local estate planning attorney that I think could be a benefit to our listeners as well. And so
I thought we were going to have Dave Ramsey on next week.
Well, I think he might be busy, and I'm not sure he'd be very happy with me or
credit
us.
cards.
Yeah. So nothing. I said there's nothing wrong with cutting up credit cards,
I'm just teasing you.
All right.
Hey, Aaron, I know you said you didn't want to be so focused on the numbers, but you probably should do the market wrap up.
You're probably right. So on the geopolitical front, President Trump met with Russian President Putin over the weekend to discuss a ceasefire deal, with Ukrainian President Zelensky headed to Washington today. Looking at this week's economic agenda, all eyes will turn to the Kansas City Fed's annual 3-day symposium, which begins Thursday in Jackson Hole. This gathering is always viewed as an important signpost for future Fed policy, and this year will be no different, giving recent developments in the U.S. jobs and inflation data and political pressure coming from the current administration. Fed Chair Powell is scheduled to speak on Friday morning. Additionally, minutes from this month's FOMC meeting will be released on Wednesday. August's flash PMI data arrives this week and will be the first insights into how the latest round of tariffs are affecting the world's major developed economies. There's a slew of housing data on tap, including building permits and existing home sales. Last week, Warren Buffett's Berkshire Hathaway revealed major purchases in U.S. home building stocks, as well as in beleaguered healthcare conglomerate United Health Group. Earnings reports from retail giants Walmart, Target, and Home Depot round out the domestic calendar. On the international side, inflation updates from Canada, the UK, and Japan are some of the major releases scheduled, along with the flash PMI reports. With that, it's been such a pleasure to be back with you. I do hope this session has been a benefit to you and to others you decide to share it with. We invite you to connect with us online at astewardsview.com. That's astewardsview.com. From all of us at A Steward's View, we look forward to connecting with you again next week. Until then, please do be wise and decide well.
You've been listening to A Steward's View. To learn more about Fidere Advisors or speak with Aaron, visit fidereadvice.com. That's FIDERE advice.com. To listen to this and other episodes of A Steward's View, visit astewardsview.com. A Steward's View is brought to you by Fidare Advisors, a registered investment advisor offering financial planning and asset aggregation. Asset aggregation systems are designed to align portfolios across accounts into a single, globally optimized investment plan for families it serves. Fidare maintains liquidity of client capital at major custodians and utilizes asset managers that have shown consistent historical performance through excellent risk management. This program is not an offer to transact any securities and does not constitute a financial planning engagement. Information provided has been prepared from sources believed to be reliable, but is not guaranteed and does not represent all available data necessary for making financial decisions and is for informational purposes only. Fidare and its representatives do not offer tax or legal advice through Fidare. Please consult the appropriate advisor. Fidare Advisors LLC is a registered investment advisor. To discuss your situation or to learn more about Fidare, please visit fidareadvice.com. That's FIDERE advice.com.